Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of August 17th, 2020. And I know I haven't done an update for a couple weeks, and that's because first, I do these updates when there's something new to report, and over the last couple weeks, there was I just didn't have anything to say as I watched what the market was doing, and then I took a vacation. I was on vacation for a week, and if you remember, back in school, one of the time-honored things was you go back to school and it was like, what'd you do on your summer vacation? So I just can't help but share one of the things I did on my summer break. I took my Harley out to Sturgis, South Dakota, for the big bike rally. So there I am on Main Street in Sturgis. Of course, staying safe, socially distancing, not doing anything crazy, just trying to have a good time. And as you can see, I've got my mask on, full face shield and a helmet, and staying away from folks and just trying to have a good time in a safe way. And one last picture before we get into the markets. Had to visit right up to the Crazy Horse Monument. I've been to Rushmore 5 times. It's awesome. But this year, just rode up to Crazy Horse, and that is a super cool thing. If you've never been there, the Crazy Horse Monument. If you've never heard of it, Google it. It's pretty amazing. Okay, so what's going on in the market? I'm showing a daily chart here of the S&P 500 chart, and I've got a couple lines drawn. And I have to zoom in and really increase my vertical scale so you can see these two different lines. So I'll do that for you now. So this purple line is the all-time high that occurred back in February of this year. All-time high 3392.52. And last week, while I was up riding through the Black Hills, the market approached that. It got really close at 3387.89. Only a difference of about 5 points, a fraction of a percent. So price moved up and approached that all-time high. And I'm going to draw a few things here as I get this chart scaled correctly. First, when the market's moving dramatically, it's pretty easy to make profit. So this move here, I was ready for it, and during this period here, myself and my subscribers, we made some really nice profit. That was a dramatic move. We saw it coming, and took some short trades, made a ton of profit, and it was pretty easy, pretty fun. And then we expected a rebound, and so during this period, we did pretty well also. We made some profit on this rebound. And then, over the last couple months, this region, that was a little harder. I really did not expect it to go up this high. I didn't. And there was a couple head fakes. We saw, a low, lower, high, low. Oh, here we go, new lows. Well, of course, it didn't happen. And we saw it again here. And, of course, that didn't happen, and the thing drifted higher, challenging the new highs, or the old highs. So this period has been a pretty challenging period, and I was very skeptical about this rally the whole time. Well, we had double-digit unemployment, we got the pandemic, social unrest, terrible corporate earnings, and so this thing just drifted up kind of against all odds. And the tools that I use for trading, they work, but probably my bias worked against me if I were just totally honest. So that's where we're at. We're challenging these new highs. The S&P 500 is struggling now. You can see it's leveling off. There's not a ton of momentum. And I opened by saying, stand by for volatility. And there's a Wall Street Journal article that I think kind of sums it up. I'll bring this over. And it says, here's the headline, Wall Street Journal, traders brace for haywire markets around the presidential election. And I think that is an accurate statement. So, of course, there's a ton of controversy about, of course, this is a highly contested election. Passions are high on all ideological fronts, and the big debate about mail-in ballots or in-person voting and how's that going to work at the post office, and even if however the election is held, are the results going to be challenged? Are we going to have kind of a crisis and delayed results from the election? And I think that's going to inject out into the fall some uncertainty into the market. So I don't think it's going to get easier to trade. It could be that the market, this is the S&P 500, this is the best representation of the total market. It could be that it actually goes and puts in some new highs, but I don't think there's going to be any real momentum, and we could get a reversal and another big down move from here. I have this dashed red line down here, and the what's important about that dashed red line, in this same article from the Wall Street Journal, the single largest option positions for the indexes right now are for the S&P 500 to go below 2,500 before December. Institutions, there are a huge number of option positions looking to profit from a move below 2,500 on the S&P 500. So take that for what you think it will. Here's another, I'm going to show you a graph. Find it, a little sidebar graph here. The VIX, the volatility index. In this graph, what the implication of this graph is that every election year, the VIX, the volatility index, has increased the month ahead of an election. So that would be October. And the VIX is simply driven by volatility in the market. So I think we should expect increased volatility. The large institutions are hedging and looking for a move for the S&P 500 below 2,500, at which point they would profit. Again, earnings are terrible. We still have double-digit unemployment, and a very large number of businesses, particularly small businesses, shutting down. It's a difficult economic environment. So, I continue to have a bias to the downside, and will be more apt to take more trades when there's signs of it heading down. Again, there have been some head fakes. It's been a tough market. If there are incremental new highs, I think they will be, modest. And I think the opportunities are still going to be in individual stocks that are moving independent of the overall trend, and there certainly are some. And I'll be looking for those opportunities. And then if this thing really does continue to reverse off this and head down again, I'll probably be trading the index and some of the major index components short again. Probably the other notable thing is gold. Gold's had a pretty good run. There's another article on the Wall Street Journal that talks about gold and how what the miners are doing with gold. And they are not investing in new exploration and even really new production. They are kind of behaving as though they think the high is in, and they're using some of the profits and the windfall from the recent rally in gold to pay down debt and some other things. So betting on more moves up in gold right now may not be the best move. So I'm going to look for signs and setups, and if they happen, I'll include them in the next update. For now, we're just going to watch close, and we're going to expect volatility. And between now and the election and the end of the year, the plays may be in volatility. You can trade the VIX. There's some ways to do that with some sophisticated option positions, or just individual stocks that are moving radically. Maybe shorten up the time frame on the trades. Take advantage of short-term moves up or down. And that's how I'm going to be adapting my strategy, and just, stay nimble and look for opportunities and take advantage of them. That's what I got, and hope you found it useful. There's no crystal ball here, and trading is, again, all about probabilities and following the system, be disciplined, taking advantage of opportunities, using risk management, and that's what we're going to continue to do. As always, I welcome your questions, your comments, and your feedback. All right, thanks.